What are the nuts and bolts of a winning methodology? One of the most common questions that we run across and common issues that traders and investors struggle with is how to design and how to know that they have a winning methodology, one that will be consistently profitable. In my book, Peak Performance Trading and Investing, and also in an upcoming video course, I deal exactly with this topic because it's one of the most common ones and it's also one of the most solvable problems. The important thing to note is that anyone who's trading or investing needs a methodology. There are a bunch of reasons, in no particular order. One is that we as human beings have a tendency to be very inconsistent in our decision making. If we don't have a methodology, then we won't remain consistent. So we need a methodology to keep us on track, to keep us consistent and disciplined. The second thing is that a methodology should be based on research. You have checked out and discovered patterns or certain inefficiencies and advantages in the market that you can exploit to make money. The methodology just codifies something that works. It is your approach that tells you, okay, if I do this and this and this and take advantage of this opportunity, then I will make money over the long term. If you don't have a methodology, it's probably because you haven't found something that you can consistently exploit to make money. So find something that you can consistently exploit to make money. And then the third thing is that a methodology helps us to avoid some of the pitfalls that come with being human being. In his book, Thinking Fast and Slow, the Nobel Prize winner Daniel Kahneman documents many biases and decision-making shortcuts that we have as human beings, all of which lead us to make less than optimal decisions, especially when money is involved. As Kahneman sums up in the conclusion, he writes that he's been studying this for 30 years. He can document all kinds of biases that human beings have, and he still has trouble, and he still has the same dumb mistakes that everyone else makes. So even if you're a Nobel Prize winner who studied it for 30 years, you'll still fall into the same traps as everyone else. So we need a methodology that can at least minimize the effect or the impact of some of these biases on the decisions that we're taking. So the best way to do that is to have a methodology or to have a plan. As Benjamin Franklin wrote, failing to plan is planning to fail. So there are a couple of ways that I talk about in my book and in the video class in depth as to how we can construct a winning methodology. The first is to make sure that we have a methodology that shares many of the characteristics that are found in every methodology. If you read the Market Wizard series, for instance, interviews with many successful traders and investors, you'll notice a lot of patterns that recur. Most of the people interviewed will say that the secret to their success, if they had to attribute it to one thing, is that they cut losers and they let winners ride. Most of the people interviewed also say that they have a methodology that works overall and it works for them, meaning that it's suited to their personality. I've identified 7 of these characteristics, or these shared characteristics. I've called them the basic truths of trading. In my book and in the video course, I go into more detail about what they are and how they work, but suffice it to say that any winning methodology has these conforms to these 7 basic truths. The second thing about that is you can test a methodology very quickly. You compare it with the 7 basic truths and you see if it shares them or not. If it doesn't, then your methodology needs work. Either you need to sharpen up how you're taking profits and cutting losses so that you're turning the statistical expectation more in your favor. Maybe you just need to make it better defined. Maybe you just need to make it better suited for your own personality, your own strengths and weaknesses. Whatever it is, you need to make sure that your methodology conforms to these basic and universal principles. The other thing is that you need to make it work for you. The person carrying out the methodology or executing the positions should be playing to their strengths and avoiding their weaknesses. if you are an auditor, you know everything about company financial statements and how to read them and how to interpret them. You should use that knowledge. You should be a longer term investor, and you should be investing in individual companies, either in equities or in fixed income. You should not be trying to day trade S&P futures, because that's going to be far outside of your core strengths, and you won't be using your strengths. Similarly, if you're an engineer by training and you're great with numbers and quantitative systems, you should probably use a quantitative system or something that's more quantitatively oriented in your trading or investing, because that's playing to your strengths again. So your methodology should conform to these universal principles, and then it should also be suited to you and to your own strengths and what you feel comfortable with. The last thing to note about a methodology is the way that it is expressed. The most simple and effective way to do this is to turn it into a checklist, a simple list of items. Check step 1, is this or that present? Step 2, is this or that present? And on and on and on. There's a great book called The Checklist Manifesto by Dr. Atul Gawande, and he explores how, especially doctors, but also people in various fields, manage complexity in very complex, intricate situations. And he found that in a surprising number of those situations, they either use checklists already, or the introduction of a checklist dramatically improved outcomes. One example is the case of airline pilots. Obviously, piloting a plane is a very sophisticated undertaking, but they found that the introduction of pre-flight checklists made it much, much safer to use a plane, and for the pilot, it made it much easier, because it actually required less complex thinking and enabled him to focus on doing just the simple basic tasks he needed to do. It also freed up his mental resources away from thinking of all the things he needed to do, and instead focusing on some of the other things that could go wrong, or where his judgment, much more subjective judgments were needed. The other thing about checklists is that it actually makes things pretty black and white, right? Either it works or it doesn't. Is it a check or not? So in that way, it makes it easier to make a decision. The last thing is that we've seen several examples already of how checklists are used by investors, and they're very successful. In his book, The Playbook, Mike Bellafiore of SMB documents several successful traders and their playbook, which is their list of setups that they use. And if you see how they write up a sample setup, it's a checklist. I'm looking for a stock that's in play, check. I'm looking for a stock that's breaking through key levels on volume, check, et cetera, et cetera. So that's exactly how it's defined. Another example would be Monish Pabrai, who is a disciple of Warren Buffett, a very famous and successful value investor. He has a 70-item checklist that he looks at when he's researching a potential investment. And he says that this has transformed his results, and it's also improved his win rate dramatically, because he's able to filter out some of the obvious losers, but also some of the judgment calls where it could go either way. The checklist helps him to organize his thinking and to reject some of the more chancy ideas. So these are what I think are the nuts and bolts of a winning trading methodology. If you understand this and take on board the lessons, then you should be able to do a few things in your own trading and investing. The first is to figure out if your own methodology is one that works, or if it needs improvement. Second is I give you the framework for how to think about a methodology and how to see where you can improve it and in which ways you can improve it. And then the third thing is that if you have the plan defined in the right way, then it will make it much easier for you to make the right decisions and for you to stick to those decisions when markets get crazy and volatile and you're not really sure what to do. So I would encourage you to take a look at the book and the video series, and hopefully we can discuss how to build a winning methodology together.